You're listening to SUSE Radio.
Hello there and welcome back to Open by Design, a SUSE podcast. I'm your host, Georgia Tolley, and we are continuing our four-part series in partnership with Temenos. Now, in our last episode, we looked at why the SUSE and Temenos partnership is stronger together. Today, we're going to look at the journey of the industry itself in the evolution of core banking platforms. Back with me are Rafiq Anivar from Temenos and Shadi Katab from SUSE. Welcome, guys. Thank you so much for joining me once again. I'm going to dive straight in. Rafiq, when we talk about evolution in banking, people often think of just moving from paper to apps, but behind the scenes, what are we actually referring to?
That's a great question, Georgia. So when we talk about evolution in banking platform, we are really talking about a fundamental shift in how banking technology is currently designed and deployed and operated. For decades, banking systems were built primarily for stability and reliability. Innovation cycles were slower, and the focus was on ensuring that the system could handle critical financial transactions securely. But in current world, the expectations are completely different. Customers expect real-time services, they want digital experience and constant innovation. So a bank needs a platform that are not only stable, but also flexible and scalable. So in terms of the evolution, is really about a shift from monolithic system to microservices, from a VM-based infrastructure to container-based platform, from a static environment to cloud-native platform, and also from a major shift is from manual operation to an AI-driven automation. And this is where Temenos Cloud Native journey becomes very important so that we are able to address all these concerns to the bank so that they can transform easily and scale easily.
Okay, I really like that phrase there, that monolith to microservices. And in that sense, you're sort of breaking the engine into parts. But in technical terms, what is actually changing for the banks when they make that shift?
So let's say that traditionally, most core banking system were built as a monolithic application. And that means that their entire system was packaged and deployed as one large unit. All the components were tightly connected, and if you needed to change or update one part of the system, you often had to redeploy the whole application. This approach worked very well in the past because banking systems were prioritizing stability over speed. But the digital era introduced new expectation. Bank now needs faster feature releases. They need independent scaling of services. They need continuous delivery, and they have to have an API-first architecture. Microservices or distributed architecture with a composable banking solve this by breaking applications into smaller and independent services so that each service can be deployed independently, developed separately, and scaled independently. For example, a payment may scale during peak season, but customer may not need the same resources. Microservices bring agility without sacrificing robustness, and that's what this shift is about.
Okay, Shadi, I'd like to bring you in now just to sort of dig into how the underlying infrastructure actually supports what is a massive shift in many ways.
So we are talking about four simultaneous shifts here. That's happening in the banking technology. And when you look at them, you're looking at shift one, that is the architecture. And that goes from the monolithic application to microservices. Instead of having this big, massive dinosaur application that used to be there for years and years, the banking now are breaking them down into smaller systems to be independent service. The second shift is the infrastructure. They're now looking into the way that it used to be operated from the typical physical data center or the typical virtual machines to how it can be containerized and orchestrated into a Kubernetes. The third shift is the operation, because with all of that happening in the technology, there is a shift happening to the people and the way that they used to operate this technology. And that's from the manual to the ticketing-based IT operation to an AI-driven predictive self-healing, or what we call today AI ops. And the fourth shift, and that is the most important one, is the mindset. And this is the one people that they don't talk a lot about it, which is we built it once and we maintain it for 15 years. Now we need to deploy it quickly and we need to fail faster and recover faster. So with that all being said, in the banking sector, which is unique, they need now to look into how that can have the very high availability, because in the banking, a 30-second outage can move millions of dollars in the wrong direction, can trigger regulatory investigation, can destroy even customer trust if they're not able to access their bank. So the bank now have to make these four shifts together. It's like keeping a plane flying on 40,000 feet altitude all the time and staying there on that altitude. I hope that elaborated further.
Yeah, can I dive into Kubernetes in a little bit more detail, Shadi? Why do they specifically matter so much in the banking sector?
So that goes back into agility, availability. That is what maintain any business and keep that business alive and thriving. If and this is a sentence that we all hear, because if you don't evolve, you die. If you're not going to serve your customers with the best in-breed technology features, they will look for someone else who would do that. And at the same time, you are bank, so you are giving them the right services, the right system, the easy system that they can operate. In the world of the Kubernetes, which has shifted massively and took every business in there, this would allow them to have the fast and the high speed agility, because as I was explaining, a monolithic to a microservice, a monolithic means a dinosaur. It's very hard to make a dinosaur walk, but a microservice means a tiny little minions. So every day you want to do a shift or a change, you will change one of these minions and it will be easy in there. If you want to add a checkout cart now, because customers like to have that option, it will take you a few minutes to add it in your application. But if you're looking into a dinosaur application that was in a monolithic, it will take you months or even year to rewrite this application again. So that's the first part that the Kubernetes has helped on massively. And at the same time is the ability to have self-healing and high availability. So in the Kubernetes space, it will automatically review its code. And if it is not working fine, it will reset itself and it will start again. And because this is not a dinosaur and that's a tiny little minion, it is faster to reset that one and operate it quickly than resetting a dinosaur, which is having a massive size, which can take days to recover. So these are the two massive important for the Kubernetes space.
I can't imagine. But I think this conversation is going to stick with me just because I'm going to be imagining dinosaurs and minions going forward. It's just brilliant. Hundreds of minions running around. Okay, Rafiq, we can't talk about evolution without mentioning AI. So what does AI-driven operations or AI ops actually mean for a bank's day-to-day work? Because I imagine it's changing the environment entirely.
That's absolutely correct. As banking platform becomes more distributed, microservices, containers, and we have a lot of multiple infrastructure environment, the operational complexity naturally increases over here. Traditional monitoring tools were used for simpler architecture, where applications ran on a limited number of servers. But when it comes to a cloud-native environment, there can be thousands of moving components. AI-driven operation, referred as well as AI ops, helps us to address this complexity. So the system can analyze a large volumes of operational data from logs, metrics, or performance traces, and it uses this machine learning capability to identify different set of patterns. And this will allow banks to detect anomalies, predict potential issues, and even, as Shadi was mentioning, to automate the responses. For example, an AI-driven system might identify unusual latency patterns in a payment services before even the customer notices any disruption. So it could automatically trigger scaling actions or alert operations team before the issue escalates. In a banking domain where availability and trust are critical, the shift from reactive operations to predictive operations can make a significant difference.
Okay, let's wrap this conversation up because I want to really dig into what this entire evolution is going to mean for the future of banking, Rafiq.
So that leads us to autonomous banking platform, Georgia. It can be a platform that can self-heal, self-scale, and self-optimize, where infrastructure fades into the background and innovation should take the center stage. The shift from monolith to microservices, from VMs to containers, from reactive ops to AI-driven intelligence is not just about modernization. It's going to be the foundation of the next decade of digital banking. And the institutions that embrace this shift today will be the ones that the customer will trust tomorrow.
Wow, we really get a sense there that we are on the cusp of a complete revolution in many ways. What a powerful way of looking at that. Rafiq, as ever, Shadi, thank you for another fascinating conversation.
It was an absolute pleasure being on the show today in Georgia, and thank you for the insightful conversations.
Thank you, Georgia. Thank you, Rafiq.
In our next episode, we are going to be discussing the security and compliance side of this evolution. You know, how you can stay agile without compromising on safety. Now, if you'd like to listen to that episode, make sure you subscribe to Open by Design to make sure that you catch it. I'm Georgia Tolley. Thank you for listening.